All right, we are live and we are back. Markets and Nonsense, episode 7. Rohit is definitely not smiling. Uh,
I'm trying.
oh goodness, what a
Good.
start.
First episode you started also he's smiling. Now the episode is he's not smiling.
Yeah,
Should we smile or should we not?
yeah. I don't know.
I think we have lost Chavan. Give us a moment.
Okay, there seems to be some issue. Am I audible enough? Okay. Okay. Rohit, you're on mute. Uh, yes.
I was going to call you. ठीक है.
Yes. Sorry.
Fine. I
Sorry.
can see you. I
Some
can
net-
hear you.
Yes. Some network issue. Sincere apologies. Anyways, I'm back. So, Rohit, how surprised how surprised are you with the market the way it is behaving? The entire sentiment says that everyone is bearish. The sentiment indicators shows extremely oversold. Last week, you even wrote a uh, long short report, and you sounded little bullish from there, saying that okay, the market
Did you
should
say
start.
Vicky?
No, I mean the market has to start going up from here, but quite surprisingly, it's not reacted. Neither it has gone down. There's a tug of war going on. Which way we are going now?
So I wrote that when we were still above 22,800,
Mm,
and we are right now at 22,500. That's around 1% down. But I was not somewhat bullish. I was pretty bullish, and uh, no, I think let me put it this way: it's not that the market surprises us. Okay, when you look back in hindsight, you look at the indicators and various tools together. And I'm not talking only of sentiment because we have RMI and we have the trade setup. Then I only feel like kicking myself for not seeing what it was or not thinking of it differently, because what happens with only looking at sentiment is you get biased. So sentiment only tells you the state of the situation, the eventual outcome, but sometimes it might not, as we learn here, not tell you what might happen in the immediate course. For that, you have to go back to the trade setup, and so that is the catch. We had an oversold reading on the swing just before the budget. The market rallied into the budget and one day after the budget, and then
mm,
after that it started to sell off. Now when it started to sell off, uh, first the hourly 40 hour broke. So basically throughout this rise we did not cross the hourly averages. So that's something that Jay kept writing in our daily notes, even though we are thinking, oh, market should come up, but it's not crossing. And then eventually the RMI gave a sell signal, which is still there till today. So once the RMI gave a sell, it is in sell on daily, it is sell on weekly. Okay, all the time frames it is in sell. But my view remains that, oh, everything is telling me it should bottom out. So therefore, uh, this thing which I have mentioned this so many times in the last 2 3 years, especially when views go wrong, I say there's view and there's execution, and all the mistakes are made in execution,
correct. Mm,
including myself. I also make them. I am not denying that. Okay, so humanly we all have our issues, and we make that mistake. And when we look at it, we say the trade setup was perfect. Prices bounced in 3 waves, touched the upper Bollinger Band and sold off. What is the problem? If you thought it was going to be a counter trend bounce and form E down, which is what you were talking of, Jay also mentioned it to me once, and I was like, it's already ABC is done. Why should we get E? But you got it. And now when you're getting E and you're at the bottom end, you're getting scared about being right. When it's the time to double down. So this is, but you're not able to because we were early positioning. We were in this trade early. It is costing you money because you're on the wrong side. But that's because of wrong execution. It has nothing to do with the underlying view. So this is a very important aspect of understanding it. Now where are we today? So we have been falling for how many consecutive days now? First we fell for 8 days, then we got a positive day. That's when I wrote the long short report on the following day, I think 18th or something. And then from 18th onwards, 1, 2, 3, 4, 5, 6. Now this is a 7th day, which is looking like down. Of course, we haven't closed for the day. I don't know whether we'll close up or down today. But we are just at that 27,547 level struggling. There are several ratios, several numbers around that level, plus or minus. And and the ending is there, and you just are on that line. You're top of that line. You're not even like you've broken it. And if you break it for a day, also, Fibonacci ratios are there, which can be false breakdowns. So it's not necessarily that just because you broke that level, sab kuch khatam ho gaya. So that would again be a wrong opinion. So it comes back to if you had a zero position today. So one of the ways to think about the market is forget whether you're right or wrong. Today, what would you do? You have a zero position. I give you 1 million rupees. Would you go short or long? And by what quantity? And then if I ask you this question, then your answer will completely change. Because first of all, looking at sentiment, you're not going to go short. And that only leads you to one answer. You will want to go long, but you will do position sizing because you don't have all the confirmations.
Yeah.
So
Except the sentiment, absolutely no confirmation so far. Yeah.
So sentiment only tells you what is likely, but that likely has to start playing out. And that is the trade. When that starts playing out, you participate. And that's what it is about. What happens with us sometimes is we get carried away and we are early in the trade. And therefore, we are suffering from a bad execution.
Okay. Now that how do you take it forward from here? Are you still bullish in the markets? Do you still feel that it's extremely oversold? It's all about price action. Just wait and hold and see.
Absolutely.
Yeah.
Absolutely. And there's a reason for that. Well, I say this and I'm saying it with confidence right now. You know what? I'm hell scared of going wrong tomorrow. This is a very important aspect. I wrote an article on this. I think it's still there on the Indiacharts pages of educate yourself. I created this section called educate yourself. It's free. Go to indiacharts.com. Go to market analysis and click on educate yourself. There are multiple articles, and one of them is trade against yourself or against your emotions. I think it's called something like that. Maybe I should just show it, then it'll make more sense. So I'm just going to open my screen, share screen. Okay, so we go to Indiacharts, we go to market analysis, we choose educate yourself. Okay. I think it's a pretty, it's a pretty old article. So this is 2017. Remember how old that is. Even I didn't know it was so long back. But I wrote these very, very specifically keeping in mind a certain idea and be a contrarian to yourself. Now, why is this difficult? It's that when you're fearful, you're supposed to be greedy. That's the whole catch. We are scared US will fall and crash tomorrow. We are scared Nvidia earnings kya aayega. We are scared what will happen to the bond. There's so many things we are scared of. And in reality, some of those fears have even been taken care of. Okay, some is still around, like, okay, what will be the impact of Trump's tariff? Okay, so while some of those are still around, uh, uh, we are still struggling with the ones that we are not able to get over. So Trump's tariffs on auto sector, but how much auto does India export? Nothing. So does it really matter? Even if he puts 100% tariff, maybe a bit, maybe not. Okay. In general, a lot of people have already said it that tariffs are not so impactful on India. So what is it? What is India's problem? Okay. What about Europe? If there's so much taxes are going to, he's going to put a huge number of tariffs on Europe. He said it once, he said it twice. Yesterday, the FTSE bounced back. DAX closed nearly at all-time high. Last week, they made new 52-week highs day after day after day, even as the US market is struggling. What the heck? So what is going on? And that's what I wrote about in the long-short report. It's liquidity. It's the support that these markets are being provided by their local governments and central banks. And that is what India has done. So I'm sort of explaining what's there. Partly in the long short report, it's there in one of the videos. I did a interaction with Palak, and that this was part of the discussion in politics, geopolitics. The video will probably go live later in the evening, so people can watch that. But basically, this is it. India has already taken so many measures on liquidity in the last month, and it has reversed its stance on everything. But the market is not ready now. So there is something that has triggered selling into Indian market, which is not ending. I thought it would end by end of January. It didn't. Now it's ending by end of February, where the positioning is. Maybe it has to do with the futures open interest, because the futures open interest is not coming down at all. Total futures open interest. So this is another interesting thing that I've been tracking. Let me again share my chart. Okay. And this one is from Strike. So, and I'll make it white before people say Dikh nahi raha hai. And we go to sentiment. We look at the derivative data. Here it is. And in derivative data, I look at see there's a futures open interest. So let's take the total. Now total simply means not just index, but index, stock, everything put together. Okay, so it's the total market. So when you're looking at this number, look at this. What has happened? Futures open interest kept rising all the way to the top. Okay, that makes sense. Then the market is falling, it's coming down. But it didn't come down a lot, and then it started to rise here. Here, when the market fell in so-called wave C, what we are trying to call, instead of going down, it's gone back up. And okay, this is expiry. In expiry, the position didn't go to a new low, like what happened here. So this was some kind of unwinding that had happened, which is why the market then rebounded from there. But here, it didn't go to a new low. It held up. Okay. And it's still holding up. Now, it's not back to the highs, of course. But by holding up, what it does on a relative basis, because you're not adjusting for the fall in the market, the positioning is as high as it was at the top, which means that people have both gone long and short. So some way we read it is that if the market is falling, okay, if the market is falling here and OI goes up, it means there's a short built up. So one thing is there's short built up, and second part is when does the exit happen, when do the longs give up, when do they cover? So none of that has happened. And so there's a separate chart and indicator we use, which is futures by index. So just to make sure that, see, if index has fallen and futures open interest has not fallen, that means the position has gone higher. So we divide it and try to, and that's when we can see that yes, position has gone higher, actually speaking in value terms, in a relative basis, because people are not cutting their position, and maybe they added shorts at the bottom. But for every short, remember, there's a long. Open interest is a double-edged sword. So people are buying and selling into this market down here. But there is no capitulation of that position. So maybe, and that is where the market is still falling, because this position is still there. And maybe on expiry today, finally people will give up, because mid caps are down so much that a lot of position might get unwound. So you might end up getting a drop, something like this. Or even as you saw in March. So you see there's something here which happened very similarly. It went up right here into the last phase of the fall. Okay. And then after expiry, what happened? This is where people give up. This is what I'm trying to look for tomorrow. If this happens and people give up their positions, rest assured you will be starting March on a very, very thin position, and it will get added back. I'm giving you theory after theory. So here, when this positioning was going up, going up, going up, we thought it's an all-time. It had crossed this red line. We read into it as too much position, bearish for the market. Eventually, market has rolled over. Usually, it harms mid caps, this kind of thing. But now, when it will cut back here after a correction, it has the reverse impact. It means that positions got cut, and this is the same thing I will watch out for even in FIA positioning. After expiry tomorrow, is this going to shoot up? Are we going to get a short covering? So if tomorrow the position starts at less than what it was today for FIIs, and you'll only get the data on Friday evening, but the market will know probably by tomorrow. Okay, I don't know if it adjusts on the day itself. Usually, I think it doesn't, because this is the last expiry. This came in 31st, and then first Friday. So this is a Friday 31st data where it drops. Okay, so till 30th on expiry day, you don't get the breakup. So one day later, you get that idea, and then if you get a huge covering on it, basically because people just give up their positions on expiry, then it causes a reversal. So that is why expiry is important, just like pre-expiry is important. I mean, we talk about that also. If nothing happened then it's expiry. So this is the new perspective I'm adding to for people to think about. What has not happened is basically capitulation. And capitulation doesn't have to mean market falls 1,000 points. Capitulation is position unwinds. People just get tired and give up. That is also capitulation. And it's long. This is the fifth month now consecutive that we may be closing down for the Nifty. And the last time we closed 5 months down consecutive, 1996. Somebody asked me this on Twitter, and I said, "Yeah, have you checked what happened after 5 months?" He said, "No, what happened?" So I sent him a chart back, and I showed him it went up for the next 8 months. Of course, there were 1 or 2 down months in between, but after 8 months, it had surpassed it had gone to a 2-year high after that, but gone back to the highs of 94, 95, which were basically to a triple top situation. So it went all the way back after 5 months down. So that's just to give people insight. Now, that doesn't mean 5 cannot become 6, but our sentiment data is saying it won't. So sentiment definitely tells me this is not a time to sell. And if I'm an investor, I should be buying anyway. See, all our problem is this is all trader talk. Whether I should buy here or not, I get stopped out, etc. Wrong positioning, bad execution. This is all for traders. For an investor, I bought last week already.
No, but Rohit, are you okay with the valuations even now at this point?
So that's a very good question. And what has happened with valuations is that we have a fractured market and we have a fractured globe as well. Okay, I spoke about Europe some time back. We've written about China a dozen times in the last 1 year. It's looking good. Wave 1, wave 2, wave 1, wave 2. It kept going down. Then it rallied last year 50% in weeks. Then I wrote a post which somebody tried to troll me, and I've blocked him already. But see, he's right and he's wrong. Where he is right is I did put a post on the 17th of October saying, buy India, sell China. That's because China had gone up 50% at that point of time. But at that point of time, India had already topped out on 27th of September and fallen a bit. So I thought India will bounce. It did bounce, but it bounced very little. And then we fell again. So therefore, both markets came down. But on a relative basis, from that day to today, I just did the math for the sake of doing it. China fell more than India. So if I want to say I'm right, I can do that. But that's not right, because I thought India will bounce more in the short term at that time between November, which it didn't that much. So I'll take that as a wrong. Okay, but China also fell. So if you bought China, you wouldn't have been any better off, which was the main point that I was trying to make, that it's not time to buy China after it goes up 50% in 4 weeks. But the point is, China is still the cheapest market in PE ratio, which you say valuations. Europe last year was in single digits. After it rallied, it went into early double digits. So it's like 14 times, 13 times earnings. Same as with China. US is at 28 times. Okay. So it becomes, India is like at something else. India is 22, but in mid cap it is 35. So it is still expensive. But what is happening now? Why are people buying China and Europe? Why is Europe at an all-time high? Its liquidity is one argument. But liquidity has to go somewhere. Where will it go? Where stocks are cheap. So they are buying Europe. Now bring the same argument, which is at the global level, to an India level. Have we provided liquidity? Yes. Who's provided it? RBI. How? Through open operations, rate cut. Today they have done something even in the financial sector. 2 years back, they were doing all kinds of measures to, you know,
Curb
make
the
it very
NBS.
tough for banks to do business. Today they have gone the other way, saying lower the risk weights. So
Mm.
these are sea changes that are happening. An entire change in policy has already happened. Government is made tax free till 12 lakhs. That much more liquidity. Government is going to spend more on capex. Last year's unspent amount is there. So now you have liquidity, okay, and you have parts of the market which are undervalued, some parts which are expensive. So where will the money go? The money will go where
It
prices
is
are
under
cheap,
sheep.
where it is
Yep.
undervalued. So what will
Mm.
you do? You will open strike valuation setup, and once we have the screeners also, people will search for stocks that are below 1 and 2 standard deviations, which was the financial sector, by the way. So now I should open the chart of financial stocks. Okay, so if we just go to financials here, okay, not just bank nifty, what is the biggest gainer today? Financials. But it's not just today. Look at the bottom. Bottom was made on 27th of Jan for Nifty Financial, Bank Nifty, Private Bank. They have not gone below that. And if you go by individual stocks in which are up today in financials, okay, this one may have fallen, but I'm just we are not recommending. I'm just showing charts. This has gone up to a new high. This bottom went 20th of January. When did this bottom? When did this bottom? I'm just showing. This bottomed on 31st of December. Why did this happen? Okay, so going back to indices. So why are we talking about this? We are talking about basically the valuation gap. So where do you check valuation gap? You go to strike, you open any of these stocks. Okay, I had some of them open, but anyway, say any stock you open, and you look at the historical valuation chart of that. Okay, so if I open this one, for example, which we just saw major gainer today, that is why I'm opening it. Okay, this is not a recommendation. So when we are opening this, we are simply trying to look at the historical valuation chart. Give me a moment. Either I'll need to refresh it or it'll come. In fact, even for Bank Nifty, we can open a
Yeah.
valuation chart of Bank Nifty. I need to reload it. Oh shit. Was coming. Yeah. So even if I do a Bank Nifty valuation chart, 10 year, this is what has happened. This is on the
Mm.
P. You can change to price to book, whatever you choose. Where you were above 1 standard deviation. Where are you now? You're less than minus 1 standard deviation. So definitely valuations are down.
Mm.
Okay, so the market is doing what? Is money is just shifting from where valuations are high to valuations are low. One. Second, where valuations are high and growth is there, money will anyway go. But there are a lot of junk stocks that were moving up which didn't have growth. And where valuations are high, they will not go. So all you have to do is you have to check valuation of every chart, every stock that is moving in a particular sector. And why I'm showing
Mm.
this is because it has a history from 2010 to here, and wherever the valuation here it was far above 2 standard deviations. Here it is below 1 standard deviation. Now it is still here. It's not even at mean and median. So,
Mm.
so this is what is happening. Okay. Now this is one sector. We can come up with multiple sectors which are low valuation. Are metals excessively valued? No. Are PSUs excessively valued? No.
Mm.
Okay. If you go by valuation, they had reached high, but they are not the highest if you compare to 2008 peak. So that's what people will think about, and that kind of shift will therefore end up happening. That you will find your areas. It's not that the whole market is overvalued. So that is simply even the divergence between Nifty, right? Nifty P is 22 and mid cap is 35. What will happen? Money will go towards the Nifty. So eventually that will also get valued, but in the short term, you might see an underperformance cycle between the large cap and mid cap. So even if we take a ratio chart of mid cap and large cap, you will actually find that the ratio peaked sometime back and has started to fall. And
Okay.
possibly that ratio will continue to remain poor. Maybe
Mm.
usually it takes at least 12 months, if not 24 months, before mid caps pick up again. at a broad level. That doesn't mean individual stocks which are in the growth sectors will not do well. They will.
Yeah.
But others will only pick up after 12 to 18 months. And then they will join the Nifty on the upside. This is what happened between 2005 and 2007. I'm just saying the same thing can happen here also, which is called a mid-cycle correction.
Okay. So, Rohit, what is that levels you're looking at now? The final level, is it the 20 SMA?
You mean monthly?
Yeah.
So that is an important support level, because that is what we ended up holding in 2021-22. Even though I think one odd month we have closed below it in some of the indices. So nothing is exacting, but yeah, somewhere close to that, you sort of believe that okay, if it holds out plus or minus, things are still okay.
Mm.
Okay, but you showed us the wedging line. I will go more with that. So let me open the Nifty chart.
Yeah.
Okay, once again going back to the charts. This lower line, okay, which is basically from this, and if we think that this is a triangle ABCDE, then at E we are just touching this lower line.
Yeah,
Now
absolutely.
you can always get a throw under, so I cannot really say that this level can't break temporarily before being recovered. So even if it breaks by 100 points, that's fine, but it doesn't have to. It could very well end up holding, because today's expiry, so I'm giving a lot of weightage to key expiry pe jo bhi low ban gaya, either that will hold. You can always keep room for another 100-point dip, but many times if the positioning changes, what I discussed earlier, if the open interest changes significantly, then I will think that the low is possibly in, and you will start seeing that short covering from here.
Okay. So you're still sticking on to your guns
I
and
put a level here on the screen, since you mentioned level. This is 123% of the last bounce, which is 22547. Okay. In general, if we hold this is the first key level. If we bottom close to this, then we can be home from here itself.
we are all we are right there. We are right.
They're right there. We're just sitting there. Yeah, it's like a
Yeah.
sitting duck.
Yeah. Absolutely.
बंदूक निकालो और गोली लगाओ, बस वही है.
Mm. How's your sleep been for the last 7 days? All okay?
No, definitely not. To say that you are okay would be wrong, na?
Mm.
So it's definitely disturbing, because there's because there's global volatility happening. So my sleep is not disturbed by our market. When I look at our market and our setup, I feel very comfortable. The pain is, of course, that it's not bouncing back. So from the trade point of view, it's a pain. From an investment point of view,
It's a patient game. Yeah.
yeah, I mean, I see it depends on what you bought. I bought some financials last week. They're up.
Mm.
Okay. So if you're thinking right, same happened with metals 1 or 2 weeks ago. The pain is here in Nifty. The pain is in the Nifty trade. So why is it disturbing me? It's disturbing me because of global. We don't understand it. Like US suddenly sold off. It was holding on. So you start wondering, oh, is it going to become a mega crash? But everything I'm reading and seeing tells me no, because of the divergence with Europe, because of I looked at Nvidia. I put out a chart of Nvidia 2 days ago. People are like, Nvidia earnings kharab aayega, to P ratio 50 hai, and earnings are going to grow by 70%. So people are saying it's not the current earnings we are worried about, क्योंकि वो तो PE कम ही हो जाएगा earnings growth से. It's 35 forward. Now the question is, will it grow next quarter? That was the worry. The worry was not whether they will grow today. And at what valuation? It's not even expensive. Our stocks are 150 times. वो ज़्यादा डर लगता है. So, and that's of course not everything. I mean, not all stocks are at 150 times. So that's the simple thing. So yeah, the main problem, therefore, again, US, yeah, worried. But again, when I look at it, I say, why should I be worried? Bond yields are falling. Everything that Donald Trump is doing is based on his plan to bring down the debt level of the US, which should bring down interest rates. And if interest rates come down, that should bring down the dollar. Now, if all of that happens, it's historically always been bullish for emerging markets, including India, and India has been the best performing emerging market. So how does it not play out? You just tell me that. So that is why I say now, when you're fearful, you have to be greedy. So I am so scared every day that I know I'm supposed to be greedy. The problem is you have only limited amount of money. And if you're wrong in the short term, it hurts. So that is the problem. And you don't want to be proven wrong. If something suddenly, actually something goes wrong, actually US falls 10% tomorrow, and I'm like, yeah, what an idiot I am. I was bearish 6 months ago. Why did I turn bullish? That is more worrying to me, to realize that you're a complete idiot. That's how we live our life. This is the life of ours. Most people will not say it the way I'm saying it, but this is how we question ourselves. So everybody gets worried. It's not that I am smarter than you, I don't get worried, mujhe sab pata hai. It's just that how do you learn to deal with that? That's what behavioral finance is all about. The last subject, you can learn everything about stock market, all fundamental, technical, and you will still fail. Why? Behavioral finance. If you don't know how to deal with your own emotions, you don't know how to deal with your interaction with the market and reading the market's emotions, knowing what is to be done now, and then being able to hold yourself up to do it, that is the toughest part. And that
Okay.
is the struggle.
We'll see how it goes. Hopes are not lost. Still
Not at all.
holding on. Hmm?
Not at all. Hopes are not lost
Not-
at all.
Yeah. We'll see how it goes. So,
We're just scared. That's what, I agree. We are scared. I'm also scared. But but I know that when I'm scared, I shouldn't give up.
mm,
At
डर
least if
क्या?
there's logic. I mean, there should be logic to give up. I haven't found any logic. No logical reason in macro, no logical reason in global market. Whatever reasons were there, they have gone away. Earlier, India had a 100% correlation with the US bond yield. I put a chart also 2 months ago. Bond yields are falling now. India is also falling. Correlation gone for a toss. So then, what should we worry about? There has to be something. USDNR was rising up to that's not making a new low. The rupee is not falling to a new low, even though it was up today morning at exactly 61% retracement. It has stopped today. So that's an intermarket divergence. USDNR Nifty. New low in Nifty, no new low in rupee. Intermarket divergence, 61% retracement on the rupee. Should be a perfect one. We'll only come to know tomorrow, unfortunately. We don't have the answer today.
Okay, डर के आगे जीत है. We'll see how it goes. We are 30 minutes on to the show. Are we taking up any questions? Any questions from? We have around 900,000 people attending this. So any questions, guys, except the stock related, please. Any questions to Rohit? We can take it up. Unfortunately, we can't take up any questions related to stock. So, anything on Twitter, YouTube? Nothing much. So let's end this, Rohit. Uh, see you next week, everyone.
There's a
Thank.
question on Tesla. I mean, it's been a sharp drop. I think that's the sharpest drop US stock has seen because of some weak data here and there. Right now, only I can think maybe wave two. So wave 2 of 5, maybe.
Yeah. Our
I don't think it
FIs.
can communicate
Yeah.
that fast.
Do you feel at any point dollar will crash?
No, it will go into a bear market. There's a difference. When we say dollar crash, we are saying hyperinflation. We are saying dollar goes to zero. That will not happen. May not even happen for 10 years. Everything Donald Trump is doing is to make sure that dollar falls but doesn't crash. So he's reducing his expenditure, he's reducing his debt. He's saying what Doge is doing. They've cut off all foreign expenditure, especially on military support. And you saw UK saying that, okay, we'll increase our military expenditure to 3% of GDP. See, world is accepting it. Whether they agree, what they say, don't look at what they say. Oh, they may say, oh, US is doing blah, blah, blah. But they are taking measures which are in line. They are all in agreement. Because they will also suffer if US suffers. So everything is interdependent. So US is making sure they spend less, they cut their budget, they cut their deficit without cutting domestic spending. So domestic growth doesn't get hurt. So very well planned thing. And so in that environment, don't expect the dollar to crash, but you will expect the dollar to go down.
Okay, fine. So Rohit, FI positioning last time, same time was also held in the same way during
So
the
there are
same.
two questions on the screener for strike, Chavan. You can give them a timeline. I think April.
Yeah, April. Yes, April. Yeah. April we should be
Valuation
going.
screener. I mean, it's ready. We've had it ready for time, but we've been trying to optimize the system. And once that is done, these things will all go live in April. A lot of things will start going live.
Yeah, absolutely. And we are upgrading the strike to 1 minute, including making it faster. Last 3 months has been bad. I agree. Apologies to all the strike users, but by next month end we should be done uh, pushing the system to 1 minute and also make it very robust and faster. And then we'll start uh, upgrading the system to new features like more fundamental scanners, sector analysis, and all. uh, okay, worst case scenario Nifty 21,800. Worst case scenario zero भी हो सकता है, but
Uh,
20
we mentioned some levels 22547. The 20 month is at 22450.
450. Yeah.
If
Hmm.
you asked me 2 months ago, I would have said 21,200, but no more do I have those levels now.
Hmm. Okay, which factor of investing works better during this market times?
Which factor? What does that mean?
What factors of investing works better during this market times? I mean, he's just asking, how do you take a call on investing at this moment? At this moment.
A combination of see, it's always and we are saying investing. So combination of technicals and fundamentals, right? Both are on strike. Fundamentals, I will look at the valuation charts. I will look at earnings growth. Those data points. And if I have a company that's growing on that's low on valuation, that's perfect. And then the last thing is I look at the technical setup for that particular stock. Where is it? Is the RMI is turning around daily, weekly cycles? If you know
Hmm.
wave counts, I can do that. Otherwise, look at the RMI setup. So,
Okay. Uh, Ketan ji, sorry, unfortunately, we cannot take up any questions related to stocks. Okay. Bon is asking, how do you read the metal index versus the other sectors?
oh, I like metals very much. If we are saying that the dollar will weaken, then that means that metals will start doing well, which is what the movement in gold is a leading indicator of the
Hmm.
reflation coming back.
Hmm.
Eventually, it started to drive up silver. We've seen copper break out of a triangle. So, copper is already doing well. Other commodities have just held up, like aluminium and all. They've not fallen much. They're not started to move, but I think eventually all of them one by one will join the move, and therefore, uh, I am very, very, very bullish on metals.
Hmm. Okay, the last question before we wind up: how will the advanced taxes be impacting the liquidity?
That's an annual March question. Okay,
Hmm.
that people will sell to pay tax. Now people already have losses. Some would have already sold. We have seen markets rally in March also in the past. 2009 market bottomed in the first week of March and rallied. Where was the advance tax? Everybody was in loss. So I have never looked at that as a reasoning, though it does exist. It's not wrong, but there's also something else, right? There's something known as uh, what mutual funds do is managing their books and their NAVs. And so when market goes up in March, people say funds are managing NAV. When it goes down, they say advanced tax ka problem hai. You can choose your spice, what you want to put on top of the market movement. What's more important is getting the direction right. Whatever it is, you will find your reason to say why it went up or down.
Hmm. Okay, fine, Rohit. We are shortage of time now. Let's end this. Uh, Thank you so much to all the viewers. See you next week, next Thursday, same time, 2:30. Till then, take care. Thanks, Rohit. Bye bye.
Thank you.
Thank you.